Guys, welcome back to another video. And as always, if you're new to the channel, a sub would be appreciated as I do provide valuable educational content on a daily basis. And as always, if you enjoy the video, please smash the like button for the YouTube algorithm and let me know down in the comments below exactly what it is that you would like for me to cover in the next video. Someone asked me to look at Bitcoin. I cannot look at Bitcoin yet because I'm waiting for the fundamental data to get released for Bitcoin, which is coming on Thursday. It's coming out on Thursday. So once I have that data available, I'll make the breakdown on Bitcoin. Today we're going to take a look at the Cad from a technical, fundamental, order flow, and fundamental perspective, and a sentiment perspective as well. Now we're going to start here with the technical data first. Now before we get started, you guys just keep in mind that AUD is strongly correlated with gold, and the Cad is strongly correlated with the oil. So that kind of gives us an indication of what we can expect on AUD Cad as well. Now the reason why the Cad is correlated with the oil, because the amount of dollars, the amount of US dollars that the Canadians earn on each barrel of oil it exports is quite high. Therefore, the supply of the US dollar flows into Canada will be high relatively to the supply of the Canadian dollar, resulting in an increase in value of the Canadian dollar as well. Now, the reason why there is a strong correlation between the AUD and the gold, it's because because of the dollar safe haven appeal. Now, a safe haven is normally a place people go to when things are not going too well. So when the market's not doing that good, a safe haven pays where they normally go to. So when the dollar is in trouble across the globe, investors tend to run back. Investors tend to not go back to the US dollar, um, and because gold has a positive correlation with AUD, when AUD USD goes up, gold goes up with that as well, or vice versa. When AUD goes down, when AUD USD goes down, then gold goes down as well. Now that's one of the reasons why there's a correlation with both of them, if you ever thought about that. Now let's go over the technical data first over here. So you can see how here from a monthly perspective, the market is testing this very strong level of support here as well. Now if you look left, you can see how the market had printed this level of resistance. Market broke above that, came back, tested it multiple times, broke below that level of support, and that support is now turned resistance. So there is definitely a pullback expected in the market before the continuation, if we should expect one as well. Now the market had printed this massive impulse. After an impulse you expect a correction, and the way you do that is by taking your Fibonacci from the high to the low of the impulse. Then you can see how the 0.382 is lining up perfectly with this structure that the market had created over here. This level over the year acted as a level of support. Support got broken, resistance did not hold, market broke above, retested, continued up, came down. Then all of that resistance once became support, market broke below that, came back for the retest, continued down, printed an equal low. So we can definitely expect the market to go and eat that level before the continuation. Alternatively, the market could break above that level and continue to go upwards. That's why we have to be reactive and not predictive. So here on the daily time frame, what do we have over here? Now we can see the market had printed this red candle and this green candle. Now by definition, when the market prints a red candle and a green candle, that is considered structure in the market. So wherever this candle closes today, that will be the level of resistance that we are going to use. And once the market prints that level of resistance, we're going to wait for a clear break above that level. Then on the retest, we're going to start looking for buying opportunities to the level that we've identified from a weekly perspective there as well. Now the best way to approach the situation from a technical perspective is to wait for the candle to close today, then wait for the market to break above that resistance, come back for the retest, and then look for the continuation from that side there as well. Now today we had the CPI data that got released for the Cad. Now for those of you that are not familiar with what the CPI tells us, it's basically the consumer index. It measures the average change in the price over time that consumers pay for a basket of goods and services. It is mostly or widely used to measure of inflation. So it gives the economy an indication of whether or not they are, it gives them an indication of whether they're heading for inflation or not. Now, the data came back as forecasted at minus 0.01. The AUD, or sorry, the cat took a tumble over there. We can see what happened here. The AUD gained some strength there today. But we also got the unemployment change for the AUD that's coming out tomorrow. And one thing that we need to keep in mind for that, so the data that's being released for the AUD tomorrow basically measures the amount of people that got recruited or that got hired, and a high number for that would be good for the AUD, because that means that there are more people getting employed. Also, we'll get the unemployment change rate, which will tell us if more people is unemployed compared to the previous month. That data will be released tomorrow and will give us even a better indication of whether we can see this move going to the upside as well. So like I said, depending on where this candle closes, we could slightly come lower based off the sentiment data over here before actually continuing higher. So wherever this candle closed today, we've got that wick there. So wherever this candle closed today, we'll use that as a level of resistance. Now, if we take a look at the order flow data, so the commitment of traders, what the big banks and hedge funds and institutions are doing in the market. So if you look at the data here for the AUD, we can see based off the last report that we received over here, how hedge funds came in and they closed 249 longs and they added 1,871 short positions. The overall net positions increased from 89,366 to minus 91,486. Now we can see here that the AUD has been quite weak based off the report that we got last week, and the report that's coming out this week should show us a different indication, because we can see how the price of gold and the price of gold and the price of the Australian dollar in general has been rallying quite aggressively. We can also see how the base of the report, last week's report, hedge funds came in at 2,379 longs and they started closing 1,270 shorts. We can also see how the overall net positions decreased from minus 11,000 to 7,376. And once again, we could see how the prices of oil was rising last week into this week as well. But the US oil is priced for correction. So we can see how, because of the data that we got today, the smart money is probably going to come in and start closing some of these short positions and start looking to add some short positions. So we can definitely expect that to be released in the report that's coming up. That's coming out next week. So that's a situation that we got here on AUD CAD. So if you're looking for a buying opportunity, this is exactly where you would be looking to buy the market, which is based off the month, the weekly time frame as we've identified. But the best way to do that is to wait for the market to create structure. And the main reason why you want to wait for the market to create structure first is because you want to make sure that your stop loss is protected by a structure in the market. If you have to buy the market at the current price now, the only structure that you have to protect your stop loss will be there. Sorry, and that means your stop loss probably have to be somewhere here. So because you need to, because because just your entry needs to be protected by a structure in the level, a structure in the market. So yeah, guys, that is it for today's video. Thank you so much for taking time out of your day to watch the video, and as always, cheers for ears.